Is welcome to the 7th episode of Forex for Beginners. So I'm going to be talking about types of charts. So there are basically three popular types of charts. There is a line chart, bar chart, and the famous candlestick chart. So a line chart, it is a simple line chart. Draws a line from one closing price to the next closing line or price and used to draw. So the line chart is usually used to draw support and resistances. You will see other YouTube videos, they stress these things out. Line chart is just for drawing support and resistance because it only shows the closing price. So there is this likely to be showing spikes because sometimes there is an error when one is drawing support and resistance that they draw on spikes. So most people prefer to draw on closing price. So a line chart will look like this. You see that green line, that's a line chart. When you open your MT5 experiment, now that you know how to log in, you can now experiment, see what's happening. And then there is a bar chart. So the difference of a bar chart and a candlestick chart is not really much, except that a candlestick chart is more beautiful, more presentable. Everything is so nice on a candlestick. So a bar chart shows closing prices, what's the material showing the opening prices as well as the highs and the lows. The bottom of the vertical bar indicates the lowest traded price for that time period. So if you're in a 1 hour time frame, you know that bar chart bar candle, or I don't know what to call it, it will be for an hour and it will be showing the lowest price and the highest price, and then the range, and then the horizontal. On the left of is the opening price and on the right is the closing price. So it's pretty straightforward. So bar on the left is what? Bar on the left is the opening price, bar on the right is the closing. So if you look at these ones, you can appreciate these things. So it shows a high, the low, opening price, and then closing price. Then there is a candlestick chart. Like I said, it is more presentable, more nice. That's why most people like the candlestick chart. It looks like this. I'm sure most of you who are now traders or who wanted to start trading, you heard people saying, hey, what are candlesticks? Hey, candlesticks. Yeah, these are the candlesticks. So that's why there is a strong association of candlesticks and Forex. You can't talk of Forex when you don't know candlesticks. That's just impossible. So traditionally, if the block in the middle is filled or colored in, then the currents closed lower than. So this means that if the block is filled and then the currents close lower, it will be red. If the price closed higher, it will be what? It will be green. That's just what it means. So an example, so this means that the closing price was higher than the opening for the green one. That's why I see the open is lower, the close is higher, the high of the day, the low of the day. Like I said, it's similar to what? To bar chart, but this one is more presentable. As for the red one, it means that the price went down. So the closing price was lower than the opening price. And you can also appreciate the high and the low of the price. Simple, guys, and straightforward. So basic candlestick patterns. So these ones are used to predict a point where price will turn. You should note that this these candlestick patterns are not a holy grail. I repeat, they are not a holy grail. However, if you use them in combination with trend lines, support and resistance, your own strategy, then, and if you back test it for some time, you will find out that it will make sense and you will be profitable. And so types of candlestick patterns, they are, so I would call them, I group them into two. They are reversal patterns. So these ones, when these candlesticks appear, they usually mean a reversal. Then there are continuation patterns. So two types. So reversal patterns include the engulfing bar candlestick, the hammer and hanging man, inverted hammer and shooting star, the Doji candlestick pattern, the Dragonfly Doji pattern, the Tweezer tops and bottom. So in engulfing, you see something like this. Usually Forex, for most of us, we believe in visuals. So if you see something like this, you know that price is what is turning. It can be bullish or bearish. Engulfing candlesticks pattern consists of two bodies. The first body is smaller than the second one. In other words, the second body engulfs. That's the concept. The one being smaller and the other being bigger. So the bigger one engulfs the smaller one. So if this price action pattern occurs in a particular trend, we can anticipate a trend reversal. So if we were in an uptrend, we know that price is about what to reverse, to go down, sell. So you can actually practice now that you have now that you now have an MT5, you can try to practice. And then there is the hammer and hanging man. So these are candlesticks like that, which are highlighted in red there, inverted for the opposite direction. Then there is also the Doji candlestick pattern. They also mean something. Then there is also the Dragonfly Doji pattern. All these, you can appreciate them. If you see them, they may mean a reversal. But like I said, you have other things to confirm that the price will reverse. You can see that the one in the green arrow or lime arrow was there indicating a reversal, but price actually continued going up. So these are some of the loopholes. You have to just know them most of the times so that you are able to appreciate them. There is also the tweezer tops with the two candles which are equal. Then one example of a continuation pattern is the Harami pattern. So it can be both a reversal or a continuation. So Harami will look like this. So thank you guys for watching. Please subscribe guys. Thank you. Have a nice day.